talk about the refi of, you said 10 out of the 12 trillion has been refi. That's another really important point, because people are like, well, I'm sitting on a home. I may not sell this home. So let's talk about that real quick for someone thinking about buying a home.
All right. So on all the properties out there, a third of all houses are free and clear. Okay. There's no mortgages on it. The other
How many was that?
5.8,
A third.
a third.
Wow. Okay.
So the other 6.66, whatever, I guess, if you don't like that number, sorry. You have about, there was 12 trillion of mortgages on them. We refinanced 10 trillion of that during 2020 and 2021. So if you put 10 trillion people mortgages, in 2%, 2.75, 2.99, 3.25, nobody's thinking about moving. So before, if you getting a baby, right? I have a baby, we're having another one, we need a bigger house. They go, no big deal, we'll move up. Well, now they're going, okay, if I move up, that's going to cost me $1,000 or $1,500 more a month for just a little bit bigger house. I think those kids can share the same room now, so it's back to where it is in the 50s and 60s, where they're like, shove them in the room. We don't care. We're not going to, go buy another house. Yeah. So until rates get back into the 3s and 4s, we're going to see existing home sales not come on the market as much. It's just going to be people who have to move, or that third who don't have a mortgage are the ones who could be moving very easily.
Ed, can you talk about where rates are going? Where do you think they're going to be headed in the near future, where they're going right now, and how that's going to affect the market?
Well, we're so focused on inflation, right? That's what we look at. So every time the CPI or PPI, that's a producer price index, consumer price index come out, they look to see where the inflation numbers are. If that comes where those are going down, rates are dropping, right? It doesn't matter what the Fed doesn't really react to the mortgage rates. I know everybody thinks they go the same way. If you look, mortgage rates went through the roof way before the Fed started tightening, because that they're independent of the Fed. What the Fed does is the overnight rates the banks, the HELOCs, the car loans, those kind of things, whatever's based off the prime rate and those kind of things, the Fed funds rate. Overnight rates the banks, those kind of things. So what I see is, going forward, I see rates going down. We've seen that in the last couple of months. The highest I saw the rates in the last year and a half was 7.25 for a conventional loan. Right now we're looking at 5.99. And just to give an example of what Fannie Mae puts out there, I don't want my industry people coming after me saying you quoted a rate without APR. I'm just throwing you what Fannie Mae would say the rates are. So, and then FHA and VA.
He's lending at 5.5%, folks. He just said it.
Yeah. And those are out there. It's just, and I see rates
at 4.5.
4.5. It's coming, but I don't think we're going to be there until next year. I think what we need this recession. We're going to fall flat on our face. We're not going to have it easy, not going in recession, because you can't have one side trying to fix it while the other side is spending. We talked about this before we started. If you're on a budget, you have to have both people on the budget to fix the problem and get under control. Right now, we don't have both people on the same. I'm not going to blame mommy, but daddy's out there spending with his credit card and he's not getting on a budget, and the mom is trying to tell him, we need to get on a budget. We need to stop this.
Yeah, but the mom. Here's the interesting thing. So Jay Powell is up in 2026. They're going to get this guy out of there because he's the problem. He's like the stodgy old man saying, no, the rates are going to go up. We're going to get this inflation under control. He's going to get a target on his back. Okay. And because eventually, whoever's in power at the time is going to say, I'm sick of this. We need to stimulate the economy. It's in my best interest. And they're going to drive his ass out. And the Fed is going to start dropping some more, and then you'll start to see it. 2026, that's a little ways out though. So.
Yeah, but there is so much of that $4 trillion that they created over the last few years. There's still a lot of it out there.
Yes.
It hasn't been spent yet, and that you can't tighten money supply until that's gone. And that's why I understand what you're saying, but there's so much this administration is doing not to help out, and we need them to get on the same page. This is back in the 70s. If you go,
what do you think they should be doing right now?
They should stop spending is what they should be doing.